The idea behind this panel is that we've held this conference for 7 years. Green Tech Media, we hold a bunch of conferences. And it's always really impressive to us the caliber and knowledge of the attendees at our conferences. And we always feel a little bit guilty that we have such a small number of people up on stage able to give their opinions on things. And so we decided to come up with this session that we're calling Crowdsourced Market Insight. And the idea here was that we came up with about a dozen of what we consider to be the biggest questions facing the solar industry. These are big, kind of macro level questions that are going to be issues either today or over the next 5 or 10 years in solar. And we want all of your input on those questions. So the way that it's going to work is I'll put a question up on the slide here. You should all have a little voting machine in front of you, a little clicker. If you don't have that, raise your hand and one of the volunteers will get one to you, but look around and they should be in front of you. I'll put a question up on the screen, discuss it for a moment to give you some context for it. Then I will start the timer. You'll see a little clock count down from 10 to 0. That's your 10 seconds during which you can vote. And these are all multiple choice answers. So everyone in the audience is going to get a vote. And then all of your responses will pop up on the screen. And then the panel here, which is our group of luminaries about solar, will reflect upon your responses. They will agree or disagree with you at large, and we'll make that a way to start the conversation about each of these topics. So we'll be running through this a bunch of times, so if you get it wrong the first time, then you can fix it later. So let me introduce the panel that we have here, because I'm really excited for our panel and the expertise that they bring to bear on all of these questions. Beginning to my immediate left, we have Minh, who is the director of the Sunshot Initiative at DOE, so heavily involved in everything that DOE is doing to drive down the cost of solar and bring it closer to grid parity or economic competitiveness or whatever you want to call it. So we're excited to have Minh here, particularly to talk about the technology side of things, as well as soft costs, because Sunshot's done a fantastic job on that. To his left is Dan Berwick, who's the Vice President of Business Development at Borrego Solar. If you don't know Borrego, Borrego is one of the largest, most established commercial project developers and EPCs in the country, operating across a bunch of different states. And Dan's involved in both the business development end and the policy end at Borrego. Then we have Darren Van Hoff, who is the Director of Renewable Energy Investments at US Bank. And US Bank is one of the most active investors among the entire investment community in solar in the US, particularly residential solar in the US. So he gets our investor perspective in project finance. And then in the equity investment perspective, we have Abe Yokell down at the end, who's a partner at RockPort Capital, which is one of the leading clean tech venture capital firms, investments across the clean tech space, but particularly in solar, I think among other investments in Enphase, in Solar Universe, and possibly some others as well. So we have the perspective of technology and government, of project development and EPC, of project investment and equity investment in companies. So with no further ado, we're going to dive into it, and we'll have the panelists get their say as soon as we get through the first question. So we're going to divide these questions up into 3 separate categories, and we'll do them in this order. The first is the US solar market, so we'll ask a bunch of questions about what's going to happen with solar in the US. This is downstream questions. The second is talking about solar technology, which technologies will lead, what the cost of those technologies will be in the future, and what to make of that. And then finally, looking at the global solar market outside the US and which regions we should be paying the most attention to. So with no further ado, let's start with the US solar market questions. So no voting yet. The first question here is how will most, and that's bolded, how will most residential solar be financed in 2020? The context here being, of course, that the past few years we've seen this massive growth in third-party ownership of solar leases and PPAs at the residential level, now dominating the market. Over 65% of all residential installations, in some places over 80% of all residential installations are third-party owned today. But there's an argument to be made that over the longer term, you could see a transition back toward direct ownership, either via cash purchases straight out as solar gets cheaper, via loans, or via some other format. You could put PACE or some other type of financing in there. So think about that, and now vote. fancy technology. We're very excited about it. We live in the future. Here are your responses. Of the 400 or so of you in the room, 42% think that we are still going to see leases and PPAs dominate. 35% think that loans will be most in overtaking leases and PPAs. 14% cash purchases and 8% other. I want to get Darren's response to this to start, because you've been such an active investor in solar leases and PPAs. So first, give me your vote, and then react to how the audience is voting.
My vote actually would have been for loans. I think the 30% investment tax credit isn't going to be extended. I actually think that we're going to reach that point in time where policymakers are just going to say, it works with a 10% credit, and at that point, I think a lot of homeowners can monetize a 10% ITC. The good news for our bank is that we will migrate into the model that the consumer drives, and if the consumer wants a loan versus a PPA, that's great, and we're fairly agnostic to how it transpires.
Abe, I presume you've thought about this some in the context of investments that you have made, like Solar Universe, as well as, I'm sure that there are dozens of residential solar finance companies banging down your door for venture capital. What would you place your bet on?
Yeah, I'm gonna take the other side of this bet, actually, and pick number 4, other. And I'm biased because I'm on the board of the largest residential PACE originator in the country. But as PACE spreads across the country, I think this is going to be huge, and I'm seeing the kind of front end of that. So I would actually go number 4, other. Then I would go loan. Then I'd probably go cash, and then I'd go to lease PPA as actually the last. So I am diametrically opposed to everybody in the room.
So explain that. Why would you put leases and PPAs as the last? What has made it so dominant to date, and what's going to change about that?
Yeah, I think if you think about the cost curves in residential solar deployments, one of the big challenges obviously has been the upfront capital. And as that system cost actually shrinks, I think people are going to, and the ITC considerations come in, I think loans are going to start overtaking lease and PPAs. I also think that from a credit perspective, most of the creditworthy customers are either going to be covered already by leases or PPAs and or would rather do a loan. And therefore, there's going to be cash customers out there that don't qualify from a credit perspective. And therefore, leases and PPAs, I think the bolus is kind of behind us in some ways, and some of these other financing structures are going to take over. Residential PACE actually, from a credit perspective, covers a larger proportion of the US population than either loans or leases or PPAs do.
It's also worth noting probably, too, that this is a bit of a faulty question, especially with regard to PACE, because PACE is not mutually exclusive from a lease or a PPA, and at least from what I hear, the idea of PACE financing a prepaid PPA is really attractive and something that a lot of companies are pursuing. So you could make an argument that there's some possibility for multiple answers here. Minh, as you guys are looking at lowering soft costs and the investments that Sunshot has made in that, how do you consider financing as a part of that, and which of these do you think carries the most potential to drive down costs? And first, answer the question.
Well, first, actually, I would say that financing is one of the largest and dominant costs now for a smaller scale or any renewable energy system, be it solar or wind. The cost of capital is very germane to what the consumer pays here. For my vote here, I would actually look at it from the standpoint loans first. When the costs are coming down to the point where more and more homeowners can actually afford to pay for it, but not quite, wanting to pay out $5,000 to $10,000 for a smaller scale system, what you'll see is that the loans will start to dominate. If you look at the automotive sector, 20% of the market, 20% of the consumers lease vehicles. A lot of them borrow money, but only 20% of the vehicles out there are leased. So if you look at that model, I would say the loans will start to dominate. And as the costs come down and become more and more affordable, I think you'll see that happening more and more.
Dan, Borrego's not involved in the residential market, so you get to speculate wildly and have no business impact on that. What's your vote and why?
I agree with the room. I think that lease PPAs 2020 is not that far away. It was a head start. There are large companies that are sort of used to doing it this way. But I think most importantly, I think customers are used to paying for electricity by volume. And I think that as we see as our customer base expands and as we hopefully pay attention to your comment earlier, Shayle, that we don't want, that we sort of have increasing equity in the solar market. I think that a higher percentage of customers are going to be people who want to continue to think of this as paying for electricity. And whether or not they have the ability to secure a loan or put the cash in up front, I think is another factor. But I just think people are used to paying for electricity that way. Maybe over a longer time, we see a migration towards loans and cash purchases.
Interesting. Okay, so there's a fairly large split, both in the room, I think, and on the panel, between whether leases and PPAs will continue to dominate or whether you'll start to see a lot more direct ownership via loans or cash purchases or other, in Abe's case. Let's move on to the next question, because we have a lot to cover. Question number 2. How will distributed solar generally be compensated in 2020? So what will be the dominant paradigm for distributed solar compensation? The 4 options here being 1, net metering, and this is basically net metering largely as it stands today. In other words, net metering at the full volumetric rate for residential and maybe with some small demand charges for commercial, generally looking like it does now. Number 2, net metering looking like it does now, but with larger fixed charges. I'll also add to this as a possibility minimum bill. So the various things that utilities are talking about, so you expand net metering caps, but you impose fixed charges to pay for grid infrastructure, pay for T&D, and that kind of thing. Number 3, the value of solar tariff, or VOST, which is popular right now and is just coming into effect in Minnesota, has been talked about in a few other places. Or 4, some other newfangled way of compensating and valuing distributed solar. So, 10 seconds, place your votes. Oh, and our panelists are actually voting now too. Great. Wow, and the results are in, and this is striking. So almost no one thinks we will have net metering like we do today in 2020. This is only 6 years away, so that's notable. 62% think that we will have net metering with some kind of fixed charges or minimum bills, so like we've seen in Arizona, like we're seeing potentially in California. 21% for a value of solar tariff and 12% for other. I'm interested to hear what other is. Maybe somebody on the panel has a vote on that. Okay, so Dan, I'm going to start with you on this one because I know you're deeply entrenched in net metering discussions in Massachusetts in particular.
Yep.
What's your vote and why?
My vote was 2. I might have sort of understood that answer to be a little broader than just fixed charges, but I think I understand 2 to be we're spinning the meter in both directions, but rate structures adjust a little bit to make sure that customers are paying maybe a little more, that net metering customers who are fully zeroing out their bill are paying something for the distribution system. I think, I'm grabbing a little bit from number 1 and a little bit from number 3 there, basically to say that I think there's going to be more of an effort in rate design and in policy design to kind of make sure that customers, that the sort of the rate structures that net metering customers are on give them sort of fair credit for what they're producing and charge them for the cost that they're imposing on the system. I think value of solar structure, where you're really separating out, I think of that as a buy all, sell all model that keeps the utility in the transaction fundamentally. There's enough resistance to that among consumers in the solar industry that I don't think that's ultimately where we're headed. We're trying to get the utility sort of out of the service equation, like we have in deregulated markets in the Northeast, and that's to go to a value of solar buy all, sell all model is exactly the opposite direction that all the momentum has been for the last several decades. But basically, some basic structural policy rate design reform where customers are sort of being treated, net metering customers are sort of being treated fairly, as opposed to the kind of retail rate being the rough justice that we have now, is I think probably where we're headed. And that's being, in my view, sort of fully borne out by what we saw last year in Arizona and California, and I think what we're going to see this year in Massachusetts.
So you agree with the crowd despite stealing some value
I'm
from
2
the
for
other
2
numbers?
on agreeing with the crowd.
Yeah, right. You're very mainstream.
Yeah.
So Minh, what's your vote here?
I would also vote number 2. I think that net metering has been a very effective policy at the local level to incentivize and promote the adoption of new distributed generation technologies such as solar. but the real challenge is that it's actually not ultimately sustainable to the very extreme. If 99% of your customers, have distributed generation at their house, all those costs, all the remaining grid costs will be borne by that last 1%, and that's not a tenable situation. So, if we can agree that net metering has been effective in the past, and to start early markets, we have to think about how to transition that to a sustainable situation that promotes growth of the solar sector, as well as provide business certainty to customers who have already installed solar on their rooftops.
Darren, first, what's your vote? And second, as an investor in these projects, to what extent do you have a concern that there are going to be retroactive changes to net metering structures that could change the value of the systems that you've been financing?
So I went with the crowd and voted number 2. And part of it is you're seeing it's a big concern when we go to the top of the bank and we talk about risk to the industry. Net metering is the number 1 risk. We have a CEO who sits on the board of Yokell Energy, and every board meeting he goes to, they talk about net metering in not a very favorable way. So you're also going to have PUCs that are going to be challenged by the utilities to do something about it. You're going to have a public outcry like you had in Arizona that says, well, you can't reverse it. So there has to be a compromise put on the table. And I think, long term, it might be something a little more elegant, but in the short run, it's just going to be a fixed line charge.
Abe, this is your chance to buck the trend.
Yeah, I'm not feeling very disagreeable on this one. I also chose number 2.
Well, easy then. We've solved the net metering problem. Moving on.
Actually, can I go back to that?
Please.
For 1 second. Not all markets in the United States are at the same level of market maturity. That's one thing that we do need to think about. There are different regions of the country that have certainly adopted solar, and you showed a slide of this, more solar than other regions. And so those, in theory, should be the markets where you start pushing the policy arena a little bit further. But then there are markets that have almost no solar, and you really want to make sure that you keep the policies in place that can enable that early market adoption.
Good point. On to the next question. What is most likely, there's a better way to word this question, but I couldn't come up with it. What is most likely to happen with the solar ITC? Number 1, repealed before 2017, doomsday scenario. Number 2, expiration in 2017, meaning expiration as currently planned with no changes to it. The residential ITC disappears, the commercial ITC drops to 10%. There is no commence construction rule or soft landing built into it. Number 3, commence construction rule is added, which means that you just have to begin construction by December 31st, 2016, instead of actually completing the project by that date. And that was the rules that applied to the cash grant program. Number 4, extension beyond 2017, either at 30% or with a step down, but some form of extension beyond 2017. All right, lock in your answers. I had Jeopardy music I was going to play during this part, but it didn't work out. And the answers are in. Oh, wow. We have an optimistic crowd here. Look at that. 3% on doomsday. I think that's probably to be expected. Only 17% on expiration in 2017, no commence construction. We'll talk about that. 38% on the commence construction rule, and 42%, the highest number on extension beyond 2017. Very optimistic crowd. All right, we'll start at the end here and then move back. Abe, vote and reaction.
Yeah, I voted on the commence construction rule. I think the political climate in Washington is such that it's not likely that it's going to get extended. Maybe that changes in a couple years. But I think collectively we can whine enough to actually have some impact and have a bit of a soft landing. So hence my number 3 choice.
All right, so you mostly agree. You agree with a good portion of the crowd. Darren?
I went with number 3. But it's interesting, Dan just pointed out, number 2 is the current law. So if you look at Congress and the pattern that Congress is taking, the odds would be 2 will prevail, that they'll do nothing, and it will just drop off. But, there will be, every year there's tax extenders. The PTC, for example, is going to get extended. There's a host of other tax provisions, about 58 that expire every year. the commence construction rule would slip in on that, and for that reason, I think, in 2016, they'll just throw a little bone to the industry.
Do you think there's no chance? I mean, you talked about tax extenders, which is common. What's less common, and most people don't expect, but could happen, is some fundamental tax reform, which would be, I think, the primary mechanism in which you could have the doomsday scenario occur. Is that off the table?
Well, I don't think tax reform will happen in this Congress or the next. I mean, you're going to, still have the Congress could turn Republican with the Senate turning, a fairly high likely scenario. Another 2 years of a Democratic president. It's just not in the cards anytime soon, any kind of major tax reform.
All right, 2 votes on the panel for number 3. Dan?
I said number 4, but I meant it in a pretty moderate way of just sort of maybe we get a little bit of a step down. So I'm kind of with these guys, but Darren mentioned that point that I said it when the votes came in, which is smart money's on law not changing.
Well, I would have thought personally that we would have seen a lot more votes for number 2 as well. So I'm really interested that everybody seems pretty optimistic on this panel as well, despite, so we're all dumb money is what you're saying.
Yeah, that's what I'm saying.
Right. Minh.
So I actually voted number 4, though I believe number 2 is the more likely scenario. But you don't actually have all.
I get what's happening here. Now that makes perfect sense.
But you actually don't have all the options on the table here. There's a number of other options. In the FY15 budget request, the president put forth a refundable PTC, converting from an ITC to a refundable PTC, and that's an interesting scenario. I mean, the reality is the ITC is really not the most efficient use of tax dollars in order to achieve an ends, which in this case, deploy solar. So it's not efficient use of capital. There are more efficient mechanisms that could promote the greater adoption of solar, and a production-based tax credit could be one of those. And I also want to echo comments that were said in the earlier panel, which is the reality is it's not a level playing field today across all energy sources. There are lots of embedded advantages in the tax code and in other incentives provided to other forms of energy generation. So, it is challenging to accept that one should not have these incentives, but the reality is, the climate in Washington, will probably make number 2 the most likely scenario. But I am optimistic to see a soft landing of some form or another, or a conversion that is sustainable for the economy.
Just briefly on that, the conversion to a refundable PTC, would you view that as preferable to the ITC, or the same, or worse?
It depends on what the level is and what that PTC number is. So I think that my personal view would be that a ramp down of the ITC is probably easier to accomplish, but a conversion to a PTC would be very beneficial to the sector. Interesting.
Okay, so we're voting with our brains and not our hearts from now on. If you let's. I'm an analyst. I can't handle
the selection
this.
of the panel then.
Yeah.
Right.
All right. Next question. Here's another ITC-related question. Let's assume number 2. Let's assume current state of affairs, ITC expires at the end of 2016. What happens to the market in megawatt installation, I guess gigawatt, given the last panel, gigawatt installation terms in 2017? Number 1, it grows more than 20%. Number 2, it grows 0 to 20%, so a more moderate growth rate than we have seen historically, but still growth despite reduction in the ITC. 3, slight reduction, but not terrible. Number 4, greater than 20% reduction in installations in 2017. Vote time. I feel like I could have done 5 seconds instead of 10. Everybody seems pretty certain in their answers. Oh, look at that. Huh. So everybody is optimistic that we will see an extension of the ITC, and yet thinks that we don't really need it that badly. Seems to be the reaction of the crowd here, if I could put it concisely. Okay, so we have very few people think we'll see more than 20% growth. Fair enough. But we do see the plurality of people saying that we will still see the market growing in 2017, despite expiration of the ITC. 29% with a slight reduction, and then 16%, which is still a pretty small number, but not zero with a greater than 20% reduction. Let's start with Dan.
I said number 4, but it's not as bad as you think. I think it's because there's a pull-in to sort of, so we're grabbing some of the 2017 pipeline and pulling it into 2016. And so I think over time, second half of this decade, we'll continue to see some growth with maybe a little bit of a pause. But I do think that we should see that kind of effect, as do you, by the way, in the
Yes.
2013 solar market insights.
Well, thank you for, you scooped my answer.
Yeah, right.
Yeah, I mean, I think that's maybe the reason why this question isn't worded perfectly, which is that I think there would definitely be a big pull-in in 2016, which means 2017, even if it otherwise would have looked okay, is going to look smaller. But let's take this conceptually and say, like, is the ITC expiration going to hurt the market?
Then my answer would have been flat for that 1 year, and then we'll recover pretty quickly.
Right. Okay. Darren, you want to go
I
next?
went with number 2. I think everything that we're looking at, everything we forecast for the bank is that 2017 will basically be a flat period, probably 0%, but then 2018 we start to see it pick back up again.
I think one thing worth noting here as I'm thinking about it as well is that both of you guys take distributed generation perspectives. I think the utility market is where you see, maybe I'm scooping Minh now, it sounds like, but utility market, you're going to see a big boom in 2016 and almost nothing in 2017. Do you agree or disagree with that?
That was exactly my comment. If you're looking at top-line numbers, I don't know how it'll play out, but certainly the utility segment is probably going to be going down after the ITC expiration. On the distributed side, I actually think that there'll be continued growth on the residential sector. On the commercial, I'm not sure. So I voted number 4 personally, but that's mainly because I think there'll be a very large drop in the utility segment.
Abe?
I'm again boring here. I voted number 3. I also think it'll be, I think more in terms of resi and commercial, so I think that'll be slightly down. I agree with the pull-in comment. There's a fun discussion about cost of capital as you talk about some of these lease and PPA funds as well. Fundamentally, there should be a lower cost of capital, traded off of a swap of some kind in the period once you get out from underneath the PPA and lease structures. So I think that'll help benefit things as you move forward, and I do think we'll see quite a bit of growth after 2017.
Yeah, that's actually a good point. I'll maybe get Darren to talk about that a little bit, about lower cost of capital in a world where you don't need tax equity, or you need less tax equity. I guess the question that I have is, to the extent that you've done this analysis internally, how big a difference will that make? How much lower can the cost of capital be just by swapping in debt for tax equity or whatever it is, and how big a difference will that make in terms of project economics? Like, how much of ITC removal will that offset?
Yeah, I mean, one of the things that will happen that we haven't seen in a long time is that interest rates have to go up. So there is kind of a countervailing pull that, the asset class will become more mature. You'll see securitization happening alongside closings, and that will be, pretty inexpensive long-term debt. But you can't, print money for 10 years and not have inflation. So interest rates will go up. So I'm kind of punting on my answer because I just don't think we know. I think we'd be kind of fools to predict it.
Right. Yeah, we're all here predicting all these things anyway. Go ahead, Minh.
If I can add to that comment there, the cost of that capital, you just mentioned that interest rates are going to go up. That actually makes solar less competitive relative to conventional energy sources because all distributed generation, all these capital equipment has to be purchased up front, and whereas fuel costs for coal or natural gas are going to be borne out as the energy is produced. And so that's going to make solar even more challenging to grow when the interest rates go higher.
That's a good point.
There's some natural lagging hedge in that as well. I completely agree, but the lagging hedge is that fundamentally with utility regimes the way they are and with the regulated rate of return, their rates of return should go up with interest rates over time. Problem is it takes 2 or 3 years for that to show up, and they've got depreciating assets on the books as well that are at lower rates of return. So, but over time, that hopefully will close as long as interest rates don't shoot up dramatically, which they may.
If I can add one other thing, the point about that you made a minute ago about from the utility perspective, the sensitivity to the ITC really clarifies for me the point on the DG side in contrast, and suggests an analogy where in New Jersey and Massachusetts we had steeply falling incentive rates over the last couple of years, but no reduction in residential adoption. Basically, that growth curve has been smooth, suggesting that while cost is, I mean, I know those SREC programs are confusing, but if you're totally focused on price and cost, then you're going to figure that out, and there should be some reaction to that, and that wasn't the case. And the impact of those falling incentive rates in those markets is a lot bigger than the loss of the ITC.
Yeah, that's right. And you could make, I mean, the other analogy I think people would make is feed-in tariff markets in Europe and Germany in particular, where, year after year until basically 2013, they kept reducing the feed-in tariff and the market kept growing. Mm-hmm. So they never introduced a hard cap on the market, thinking that, well, if we just keep reducing rates at some point, it's going to hit this growth corridor that we're looking for, and it just never did. Mm-hmm. Because there was more headroom in installation prices. I don't necessarily think that just because that has happened, it will happen again. It all speaks to what the cost to install is now and how much you can eke out of that. But
I think it also has something to do with the fact that there's solar is around you more. I mean, that's, there's just more to it than just cost on smaller scale projects, I think.
Right. All right, let's move on. Next question. All right, big picture question. In 2030, so now we're looking much further out into the future, what percentage of U.S. electricity generation, let me be clear on that, generation, not capacity. In 2030, what percentage of U.S. electricity generation will solar comprise? Less than 5%, 5 to 10%, 10 to 20%, or more than 20%? Vote now. Pretty strong vote for 5 to 10%. Interesting. Minh, let's start with you. So Sunshot is aimed at, getting to $1 a watt installed for utility scale, $1.50 for residential by 2020. So we'll have 10 years in between now and then if you can achieve your goals. And that number was built around grid parity, basically. So it's basically saying we should have 10 years of grid parity behind us at this point. Where does that put us?
So in our Sunshot Vision study that we published in, I think, 2011, we modeled that solar could provide up to 14% of U.S. electricity generation capacity. Okay, and I've got to back out what that translates to, but I think that translates to roughly around 7% or so of energy generation, electricity energy generation from a megawatt hour standpoint. And so, but in many ways, that also made a lot of assumptions around the other parts of the energy space.
This one seems a little less of a magic 8-ball question than the other ones because we're starting to accumulate a base. What happens, sort of next decade is marginal on top of what, I don't mean marginal to mean small, but I mean it is technically marginal on top of the installed base already. So I think it's tough to see how it's outside of the number 2 range.
Well, I would say, I guess if you listen to, I think there's been a number of particularly like equity analysts reports recently that have been extraordinarily bullish on solar, saying that the age of renewables is here and doing these kind of broad sweeping grid parity calculations and then saying that the market potential for solar in the US is hundreds of gigawatts and there's no reason we can't hit all of that.
No.
No,
so,
no.
What's
for
like the
total,
how high can you go per year?
I mean, it's pointless to ask that question relative to today's standard.
Sure,
I mean, you could get to more than 20%, theoretically. There are enough rooftops, there's enough space, right? So the question is, you could argue you can't get to that kind of penetration from a grid perspective, but there's no physical limitation.
I think my asymptote for the period we were looking at when I just played around with the numbers was about something like 15 or 17 gigawatts per year.
Right.
So that's
we'll curb the asymptote discussion for a second and move on to Darren.
I went with number 2, really just basing it on the prior presentation that you gave first thing this morning and just kind of doing my own back of the envelope of trending it out. Not real scientific about it.
All right, you agree with the crowd as well. Abe?
I am also boring. I agreed with the crowd in the panel here. I picked number 2 And I did less homework than Dan, but a little bit this morning after I heard the 0.04% penetration. You run that out between 30 and 40% compound annual growth rate, and you end up at the 7 to 8% range. Yeah. But I do, and that is my vote, that's kind of my belief. I think the fudge factor is more about consumer adoption in some of the distributed generation discussions, in that if it becomes mainstream, and I know we just had a panel on this, but if it becomes mainstream to own solar, and as you would a car, and you start layering in lots of line charges in the net metering discussion, this could accelerate into higher levels, which really gets into the utility death spiral, which somebody also talked about today. So I do think there is a scenario where it gets up higher, but I'm kind of a believer in relatively consistent growth over many years in markets like this. So I would put it at kind of a 30% growth range over 15 years.
Minh, just quickly, if I had said 2050 instead of 2030, would your number have been, how high would the number go?
In 2050, I would actually push my answer up to the 10 to 20% range, possibly pushing, 20%.
Okay,
I mean, that's another 20 years of growth. But I think there's going to be some different challenges as we move into that territory. The grid integration challenges will become more interesting. But the advent of storage, of distributed storage, is really going to be an interesting play as you start pushing beyond the 10% level.
We're going to have a question about that in just a minute. Let's move on to a few technology-related questions as opposed to market-related questions. So, first one, what will the average price of a PV module be? And I guess I should specify here, because otherwise our analyst team will bug me about this. Delivered module, tier 1 Chinese or whoever the dominant player is in the US. So there's my specifics. What will the average price of a PV module be in 2020? So 6 years from now. Go ahead and vote. Strong vote for 40 to 50 cents a watt, which is interesting from my perspective, given that we already have a manufacturer or two who can make a panel for under 50 cents a watt cost. So it's, I mean, that I think you can get to, and I'll be interested to hear everybody's perspective on that. I think, if you have 40 to 50 cent a watt costs or prices in 2020, those are relatively healthy margins for your top manufacturers. So that's sort of a question that's baked in to this. Minh, let's start with you. You know a lot about module costs.
So first, we disagree a little bit on costs, on what people can actually make things for when you do bottoms-up analysis, when you factor in depreciation of equipment assets, when you factor in the real cost of capital, not just the cost of capital that people get. So that aside, back in 2010, when we held our first Grand Challenge meeting to scope out the Sunshot Initiative, we set a goal of 50 cents a watt for modules by 2020. And I can tell you that nobody in the room said that we were sane. Okay, everyone thought that we were nuts, because at that time, modules were selling for about $1.80 to $2 a watt. And we set the goal, and we look at if we extrapolate out historical learning curves, we wouldn't hit 50 cents a watt modules until 2030, okay? And so when you look at what has transpired just in the past several years, a large part of it being large overcapacity, large production, semi-economies of scale, you do see some prices for modules that are extremely low. That said, I am concerned about the quality. We will have to revisit a lot of products that have been recalled. I mean, I don't know of a single major manufacturer that hasn't suffered a major recall. And as the industry grows past 45, 50 gigawatts a year, it gets more expensive to recall products, right? And so it's not clear to me that we're going to be making modules for significantly less than 50 cents a watt. But it's also really interesting that just in the past several years, there's been a real attitude shift that 50 cent a watt modules is certainly possible. And nowhere in your list of 4 choices is anything like significantly more than 50 cents a watt.
Yeah, right. Well, I mean, that's maybe telling about our view on it. But right. So what was your vote?
So my vote was number 3.
You were number 3. You were with the crowd. I'm going to start to jump around a little bit so we can get to as many questions as possible in the time that we have. But Darren, let's get your answer quickly here.
I said more than 50 cents. I just think at some point you just can't make them for any cheaper. And I think the more important question would be the overall installed cost, and where you're really going to see cost compression are really in the acquisition for the customer acquisition cost.
So let me ask that question then. What will the average price of a fully loaded, all-in residential system be in 2020? Average.
$1. I'm with Minh.
That's below.
Yeah.
Min's is $1.50 residential.
Yeah, that's even
I
more
think
aggressive.
$1, yeah.
You think $1 watt
Yeah, I
installed
think
residential in
yeah,
2020?
I mean, people can order this stuff. You know, you can spend 5 minutes on your laptop and order a solar system. You know, 5 years ago it was, 2 visits to the house, a truck would come, an engineer would look at your house. I mean, it was, if you look at the cost stack of installed systems, that's still the biggest chunk of overall cost. And that's, that will come down dramatically. Permitting will come down. Permitting gets easier and easier.
Yeah, it's just impressive to be able to get to, you're going to have a module that's more than 50 cents and an installed system at less than $1, is what you're saying. All right, moving on. Here's the energy storage question. By 2020, what fraction of distributed solar customers, so this is combining residential and commercial customers, will integrate energy storage? So what portion of solar will have energy storage attached to it? Less than 10%.
Do you mean systems installed in 2020? Or,
Yes,
yeah,
I'm sorry,
okay,
that's right.
yeah.
New installed systems in 2020, not cumulative. Less than 10%, 10 to 25, 25 to 50, or more than 50. Tom Layden from Solar Grid Storage was on our pre-conference panel yesterday and said 100%, just to give you a benchmark if you're looking for one. Okay, voting begins. Oh, sorry, this is in capacity terms, let's say. Relatively even split here. Very few people agree with Tom Layden, but everybody else seems to think we are in the, some less than 10%, 10 to 25, 25 to 50, relatively even split around here. Abe, let's start with you. Presumably you're looking at energy storage investments, distributed energy storage investments, and possibly some that combine with solar. How does it look to you, and what's your vote?
Yeah, so my vote is number 2, 10 to 25. I think long-term and longer term than 2020, it gets very interesting. 2020 is kind of an interesting timing, in my opinion, because there's really 2 use cases that get people off the grid. Number 1 is actual backup and controlling your own destiny, and the second is economics. And the economics are predicated on having some kind of net metering that shows up. Otherwise, why do it? Net metering with a significant line charge. And I do think that's going to happen. I think the regulatory regimes are going to move that direction, as we talked about before, but I think they will do so more slowly than we all expect. And therefore, this, in my mind, in the 2020 range, it's more about severing your ties with utility and that use case than it is about pure economics. If we take that out to 2030, I would probably be in the 3 or 4 range. In other words, somewhere between kind of 30 to 50% of all systems based on economics.
Anybody on the panel vote for something other than number 2? Minh?
I voted for number 1. Actually, my comments are exactly the same. I think that the regulatory changes that compel distributed storage won't be in place in significant enough markets by then. It takes time for these changes to happen through the PUCs. Rate design takes time. It's a number of years that has to occur before those things get locked in and before the industry responds. So, but in the long term, I actually think it's going to be greater. Now, the question is that storage behind the meter on the individual customer, or is it a neighborhood or a distribution scale storage? That's the question.
Right. Darren, you said you also voted for something other than number 2?
Just 25 to 50%, maybe just more out of optimism than anything.
Right. All right. Let's move on. What will be the dominant module technology in 10 years? Obviously, today, crystalline silicon, extremely dominant, even more so than a couple of years ago. So the question is, will it continue to be crystalline silicon? Will thin film see a resurgence of some kind? Will organic PV have picked up? Will concentrating PV, I understand some of these are overlapping, but we're going to use it anyway. Will concentrating PV be dominant by that point, or will there be some other technology that we didn't even think of that will become dominant in 10 years? Voting begins. Yep. So, all you thin film manufacturers in the room have a tough go of it. All right, good. We don't have to spend a ton of time on this one. Minh, I want to hear your reaction, though, because Sunshot has made a number of investments in non-crystalline silicon technologies.
Right, and you have to look at from the standpoint of government investments. We do try to push ahead with new and emerging technologies. There's no reason to invest in something if it's already market ready and market adopted. So from looking at from the vantage point of what we fund isn't necessarily what will happen out there in the near term. So, but that said, I actually do believe that thin films will continue to have a chance and grow in terms of market share in certain types of markets, and it's going to be greater than I don't know what the 5 or 10% it is, or it has been. I think that it has a chance to become something like 25% or even a little bit more than that of the market. OPV has almost no chance. CPV certainly can play in high DNI regions at utility scale.
Abe, let me ask you this question in a different way. What are the chances over the next 10 years that RockPort makes an investment in a non-crystalline silicon module manufacturing company?
Very, very small.
Good, that's quick. Okay. Next question, on to inverters. What share of the US residential solar market will microinverters comprise in 2020? Again, of new installations completed in 2020. Less than 25%, 25 to 50, 50 to 75, or more than 75. Voting begins. Oh, that's the most evenly split answer that we've had yet. That's interesting. So the audience does not agree on this. We'll have a couple of sessions this afternoon with some microinverter versus non-microinverter companies going head to head, which are always fun at these conferences anyway. In the meantime, Abe, as an investor in Enphase, I presume that you have a view on this, and I can guess which side of the spectrum it's going to sit on. Tell us how you voted.
It might be slightly biased. We were the first venture investor in Enphase, and we're still large shareholders. I have no inside information, just so you know, but I do believe that number 4 is the correct response to this. And I say that because I think the reason to actually do a centralized installation is for cost reasons. There's also some training involved in all that, but it really is about costs. And if you think about the fundamental economics of micros over time, I believe they will be as or more competitive than centrals. Not there yet. Obviously, everybody knows that micros are more expensive than central, but I think with scale, with volume, and with ongoing iteration on design, they will be able to get there. And therefore, I think they will be dominant in residential, very specifically in the US in 2020.
Darren, I'm interested.
Yeah, same here. I think if you're really going to have the kind of growth in residential, not every rooftop is perfect. You have shading issues, you have tree issues, and central inverters just don't, they become really inefficient, I think, on residential. And to me, I mean, I think microinverter technology is great, and we're pretty bullish on it.
Dan or Minh, either of you disagree with number? Interesting. So this is the first time we've had the panel like really different from the audience.
Oh, I mean, I had number 3. I don't know
right.
if we were sensing unanimity on number 4, but yeah, large scale adoption.
You agree as well?
I had 4.
Okay, panel's bullish on microinverters. On to the final set of questions pertaining to the global solar market, and the ones perhaps where this panel is going to take the biggest flyers because nobody's really involved outside the US as far as I know. So, but we'll do it anyway. And I know we have a lot of people in the audience who actually do have a really good view on this, so we'll rely more heavily on you in these last couple of questions. What will be the largest solar market as defined by completed installations in that year in the year 2020? China, Japan, the US, Germany, or somewhere else? Place your votes.
Wow. That's a tricky one.
Whoa.
Wow.
China. Everybody seems to think that in the year 2020, China will be the largest market for solar in the world. Does anybody on the panel disagree with that?
I said Japan.
You said Japan in 2020. That's interesting. I mean, Japan's going through a huge growth period right now. I think the going wisdom is that it's going to have to slow. You don't see that happening?
Well, I mean, they can't I mean, natural gas is going to continue to get more expensive, and it's harder for them to get. And they're not, you can't have, they kind of turned off all their nukes. I mean, they have to produce power one way or another. And, there's just not a lot of alternatives. And, coal is, not getting cheaper, and it's not any friendlier. I mean, they have a lot of environmental initiatives, and everything that they're doing today is kind of counter to that. So they have to massively adapt very quickly.
I will oppose the panel here and say the U.S.
That's actually my choice as well.
Oh, so you were, okay. Why?
Yeah, this is you'll get an insight into the way that venture investors tend to think here. We don't like betting on regulatory regimes, and the bet in China, in my mind, is that they're subsidizing the heck out of that. I think there's a real chance that'll happen, but fundamentally, the demand in the U.S. is going to be driven by economics, and that's the kind of bet we like to make. So I'm a big bull in the U.S. on solar deployments over time. It's going to be economic in more and more states, and it's going to get out there. China, I don't think it will be economic unless the government subsidizes it in various ways, which may happen, but I'm a big believer in the U.S.
All right, let's do one more question. We may have time for two more, but we'll see where we end up. So this is a semi-grid parity question. What portion of global solar installations in the year 2020 will have no direct subsidies? So these are standing on their own 2 feet. The definition of direct subsidy is not perfect, but no feed-in tariff, no investment tax credit, no rebate, just bidding into wholesale markets or signing PPAs that are up against other technologies. So sometimes everybody's really optimistic. Sometimes you guys seem to be a little bit more bearish. So combined 74% for 50% or less, and a few people who seem to think that unsubsidized markets will be growing faster. Minh, let's start with you on this one.
Oh, this was a hard one for me. I said number 2 because I think that in 2020 is a short enough period of time away that the world is not going to change that drastically. And I think a lot of the markets that solar plays into right now do have direct subsidies. And we are beginning to see markets or projects bid into markets that have no direct subsidies, but it's still relatively small.
Dan?
Well, it's a hard question sort of definitionally, and I don't really know what China does to build power generation. I think I said number 2, that was a blend of, I think, sort of international markets that are providing subsidies in the US, where my answer would have been 4. I think just from my experience, from the day-to-day experience of project development and pricing, working with our sales team to price systems and pitch them to customers, and from my day-to-day experience of working in the policy environment, I think we're not that far away from an environment where politics get tougher, the need becomes lower, and we're not getting the kind of state-level subsidies that we're getting now, by and large.
Darren?
I said less than 25%. Just speculative that, it just gets, everyone's going to subsidize it somewhat. I mean, there's always going to be some level of subsidy. I just think even if it's just every state level, every municipality, I mean, how you define, maybe mine is more based on the definition of subsidy. Mm-hmm. I think that's it.
It would have been interesting to have somebody from First Solar up on the panel here, because First Solar has sort of very publicly been making this transition toward what they call sustainable markets, which is basically the same as unsubsidized markets. And I would presume that they would be on the right side of this spectrum. Abe, what do you think?
Yeah, I think we're collectively confused here. I chose number 3, which hasn't been chosen yet, so 50 to 75%. And the beliefs there are, internal consistency on my comment about the U.S., which I think is going to be the dominant market. And then separately, folks talked about some microgrids, particularly overseas. I think that stuff's going to get stood up pretty quickly without a lot of actual subsidies. So I think there's going to be a massive amount of international market development around microgrids with solar as part of that solution. So I'm pretty bullish on the deployment unsubsidized here.
Fantastic. Well, we're basically out of time, so please join me in thanking our very game panelists here.